Welcome back. A lot of the PSU stocks, they were in focus yesterday. They ended at the high point of the day, some of them including the likes of Container Corp. But the news perhaps could be the fact that the government is currently working on a new policy that is expected to speed up its strategic divestment process. CNBC TV18 learns that the Department of Investment and Public Asset Management, DIPAM, as we know it, will now be the authority for all strategic stake sale decisions. Anshu Sharma joins us with more details. Anshu.
That's right. To expedite the process of strategic disinvestment, we learned from sources that government is likely to tweak disinvestment policy to enable transparent and faster approvals of stake sale of PSUs, which are part of the strategic plan. Now, this new policy will also give DIPAM authority on all decisions relating to the strategic sale. The new policy will also open up possibilities for road shows, and government is likely to move all these measures in a new policy for the cabinet's approval. Remember, government has a disinvestment target of 1.05 lakh crore rupees for FY20. And we learned from sources that Container Corporation of India, Shipping Corporation of India, BEML, Hindustan Copper could be the early contenders for the strategic sale. Now, government has already given the in-principle nod for 23 PSUs for this sale under the strategic disinvestment plan. The intention is to monetize investments made in these PSUs, get an infusion of capital and upgradation of technology and better management of these PSUs from strategic partners where markets have come of age. Back to you.
All right, Anshu, thanks a lot for that. Moving on, the 6th SBI Banking and Economics Conclave in Mumbai saw some top business leaders brainstorm over India's aim to become a $5 trillion economy. In a session moderated by Shireen Bhan, these business leaders discussed the significance of the role startups could play in achieving the $5 trillion goal. They also stressed on the need to augment financing for startups so that they could make a significant contribution to increase India's pace of growth. Here are some experts from that interaction.
The provision of capital is all coming through the venture capital or angel investors.
Sure.
These things don't fit into traditional lending method, but at some stage, all the banks, we need to provide or set aside a certain amount of money at least where we can invest, and that is something which has to be done in a manner where the scrutiny standards are different.
Okay.
Because only maybe 1 out of 10 or 1 out of 20 or
will
1
succeed.
out of 100 will succeed.
So you'll have a whole other NPA problem then.
This is not an NPA, but if 99 fail out of 100 and only 1 succeed, then you can imagine the problem for the bank.
The banks have lent 97 lakh crores. 1% is 97,000 crores. Okay? Even if you put 20,000 crores into funds managed by somebody else, it's not going to hit their balance sheet. The key thing is, are you committed? Now, the deposits that come from that could be very large. When you get $10, $11 billion, that is 60, 70,000 crores, you'll have 50, 60,000 crores deposits coming in. The business that you can do, the transformation they can do, the value that they can do. Those 34 unicorns have created about $80 billion of value. Now, if he gets only 1% the value, 5% the value, he's made his money.
I think there's a difference between regulation and protection. I think protection, where I think there's unfair practice is needed, but I think when you, and it's a thin line, it's a thin dividing line. I mean, when you cross over, it starts getting into regulation and prevention of realizing an opportunity. And it's a tough balance between regulation versus protection, but protection is definitely necessary. Whether you talk about capital rules, you talk about data privacy, all those issues which come out with the knowledge economy, all those are extremely important.
It is important to create a learning culture by not just hiring the right job families, but you will have listening posts all across your organization that can help you figure out what are the right insights to convert your company from being a pure service-oriented company into a knowledge-oriented company. And so there are multiple such paradigms, if you will, right? That I feel like if you think about those, and then as you think about that into a national context, about how do you create that culture, we might find different opportunities across the whole ecosystem.
Lending with collateral, lending with analysis is soon dead. Lending with analytics is the new way to go. I don't see a problem, a crisis, or even these two economies opposing each other. Finally, if we are convinced that the consumer benefits, which of the provider survives? It's survival of the fittest. That is the capitalist economy.
All right, with that we slip into a short break. Come back.